Good afternoon, everyone. Today is May 23rd, 2025. I'm Stephen Herwire. I'm owner of Herwire Financial Plans with Direction. Now, before we go off on our Memorial Day weekend, which first off, we want to honor all those who died in service of our country. So, to everybody out there as family members that died while in service of the country, we salute you. Okay, today, after the market wrap, we're going to be talking about riding the roller coaster. And I don't mean at Coney Island, investing during inflation and market volatility. In today's economic environment, where market volatility and inflation are often unpredictable and inevitable, investing could sometimes feel like a roller coaster. However, investing during these periods doesn't have to be a heart-stopping experience. Here are the key areas investors must be aware of to help their ride go more smoothly. In simple terms, market volatility represents the degree to which prices move in response to a set of returns and is, excuse me, measured by the standard deviation of those returns. As investors, we often perceive market volatility as a risk. However, it's important to remember that volatility is common in equity markets, but may present opportunities for higher returns. Inflation. It's an upward trend in the general level of prices for goods and services in an economy over a specific period. When experiencing inflation, one's purchasing power erodes at the inflation rate. Therefore, investors technically lose money if investment returns are at least equal to the inflation rate. Hence, investing productively during inflation requires strategies to preserve and potentially enhance one's purchasing power. One of the fundamental areas of rules of investing during these times of inflation and high market volatility is diversification. Holding a different mix of investments can help buffer against extreme market swings. A portfolio diversified across various asset classes such as equities, fixed income, commodities, and real estate may better weather inflationary periods. Additionally, incorporating high quality, short term debt and inflation protected securities may help during inflationary periods. I'm going to tell you an apocryphal story to illustrate how diversification works. There was once a lady named Sally. She worked hard all of her life. Sally had a dream to retire in Hilton Head, South Carolina, with a house on a golf course. She found that house, and it was an incredible bargain. The house had a big picture window with a terrific view of the beautifully manicured landscapes you would expect on a golf course. Then one day she found out why it was such a bargain. It happened one morning while she was reading the paper and enjoying her coffee. A golf ball specifically, shattered the picture window. The reason for the bargain price, it was on the first tee of the course where golfers had not always warmed up. So, of course, she calls her insurance company to pay for the broken window. And they said, sure, we'll pay for it. Of course, you've got to pay deductibles, they told her. And she gets the new window in. She's happy again. Another morning, enjoying her coffee, looking out at the beautifully landscaped golf course. Another golf ball shatters the window. So she calls her agent again, and the agent said the company would pay this time, but there's a third time, we're going to cancel your policy, they told her. He said, why don't you, instead of putting a window up, you put a solid wall? This is in the days before they had plexiglass. She said, hey, the view is what I bought this home for. Now, the gentleman who was there getting ready to put in the new window suggested instead of a big, expensive plate glass window, she have him install a multi-pane window. The thinking is that in her case, golf balls are inevitable, and she can preserve most of her view. And when a pane's broken, fixing it would be less expensive, and she wouldn't have to bother her insurance company. So, what does this have to do with diversification? Well, in the previous story, when she had the view with one big plate glass window, it's like owning a single stock. which in my opinion is a mistake to own a lot of any single stock unless you've got certain controls in place. So as long as the company does well and there's no metaphorical golf balls, everything will be fine. But sooner or later, something will happen and the stock will take a hit. So, as such, being in a highly concentrated position like the apocryphal plate glass window is very risky. So, the multi-pane approach helps mitigate some of this risk, but not all of it. In a diversified portfolio of stocks, the idea if one stock takes a big hit for whatever reason, except for something that would take the entire market down, gains in the others would compensate. And this is what the multi-pane window illustrates. Of course, if you have a big storm, it could be a disaster whether you have the big plate glass window or the multi-pane setup. So it doesn't protect you against all risks. It just takes away some of the risk potentially. So you got to focus on long-term investing. It's my opinion you should never put any monies in the stock market that you're planning to use in the short term. So focus on the long-term investing. Market volatility can create a lot of noise and prompt reactive behaviors that are not always in the investor's best interest. Remember that investing is a long-term process, not a short-term sprint. Given the equity market's historical long-term upward trend, short-term declines have been merely temporary interruptions rather than permanent losses. Adopting a long-term perspective and resisting the urge to act impulsively to short-term market swings may be a more appropriate strategy. Also helps if you select resistant companies. It's worth noting that companies with pricing power, the ability to pass higher costs on to the consumers without significantly reducing demand for their product may provide a hedge against inflation. Things like tech companies that are in technology, consumer staples, healthcare sectors. In periods of high inflation, these companies may outperform the broader market because they can maintain or increase, in some cases, despite rising costs. Finally, investors should consider working with a financial professional. While diversification and long-term investing are effective strategies, they require careful planning, research, and ongoing monitoring, which can be challenging for investors to manage independently. Financial professionals also offer specialized guidance to help investors navigate the complexities and challenges of investing during periods of inflation and market volatility. Key to managing investments during roller coaster periods is to be prepared, stay invested, and capitalize on the potential returns during these turbulent times. Professionals have usually spent years working in their industry and keep up with changes in the law. They also have run into things most of us would never think of. Usually, they are less likely to make mistakes than laymen. Lastly, I want someone to go to if something goes wrong. Building up the money that will fund your retirement is an important part of retirement. However, having a financial plan to help you mitigate or avoid things that can cause more damage than a stock market downturn is at least equally important. All information is believed to be from reliable sources. However, LPL Financial makes no representation as to its completeness or accuracy. Once you graduate, be it from welding school, engineering school, or law school, you're going to need a different plan for each of these stages that's tailored to your individual situation. During your working years, am I saving enough and is it in the right place? When you're in the glide path to retirement, which I define as the last 10 years prior to retirement, will the USS retirement be shipshape on the appointed day? In retirement, big important question is, how do I avoid running out of money before I run out of life? Finally, legacy. Once you're done with retirement, does what you worked hard for get to where you wanted it to? I do in-person, Zoom, and phone appointments. I can be reached at hardwirefinancial.com. I am licensed and registered across several states and can easily add states if there's a need. If you'd like to schedule an appointment, you can click on the Schedule an Appointment button in the upper right-hand corner of my website. Want to see more videos like this? Go to my YouTube channel. You can click on that red button near the Schedule an Appointment button and get right to it. Please like and follow me and subscribe to my YouTube channel. Finally, for those who prefer the good old-fashioned telephone number is 518-631-2569. Do not text that number. We'll both be sad because I won't get your texts. Opinions voiced in this material are for general information only, not intended to provide specific advice or recommendations for any individual. All performance is historical. No guarantee of future results. All indices are unmanaged and may not be invested in directly. All data is believed to be from reliable sources. However, no representation is made as to its completeness or accuracy. None of this is to be construed as tax, legal, ERISA, or investment advice. Consult your advisor prior to taking any action. Unmanaged index returns do not reflect fees, expenses, or sales charges. Index performance is not indicative of the performance of any investment. Investing in stock includes numerous specific risks, including fluctuation of dividend, loss of principal, potential illiquidity of the investment in a falling market. Investing in mutual funds involves risk, including possible loss of principal. Fund value will fluctuate with market conditions, and it may not achieve its investment objective. Dow Jones Industrial Average is comprised of 30 stocks that are major factors in their industries, widely held by individuals and institutional investors. Standard & Poor's 500 Index is a cap-weighted index of 500 stocks designed to measure performance of the broad domestic economy through changes in the aggregate market value of 500 stocks representing all major industries. The NASDAQ Composite Index measures all NASDAQ domestic and non-US based common stocks listed on the NASDAQ stock market. Market value less sale price multiplied by total shares outstanding is calculated throughout the trading day and is related to the total value of the index. Herwire Financial and LPL Financial not endorsed or affiliated with the United States Social Security Administration or any government agency. All investing involves risk, including loss of principal. No strategy assures success or protects against loss. There's no guarantee that a diversified portfolio will enhance overall returns or outperform a non-diversified portfolio. Diversification does not protect against market risk. All right, everybody, have a great Memorial Day weekend, and I'll